Greetings, market rebels. Welcome to this week's macro measure video combined with the sector situation video. And it is Friday, June 20th, 2025, summer solstice time. Here's the trusty disclaimer from Market Rebellion. Here is the trusty intellectual property rights notice. And I'm going to flash the slide from last week and just highlight something very briefly, which really are this air pockets comment we've been working with now for several weeks. Remember that because I think things definitely took I guess, step in the wrong direction if you're a bull. But unfortunately, it's hard to be confident given how news develops with this current administration. Anyway, this is really what we came into in terms of current thoughts last week. We said, let's just stick with let's stick with the action. Let's watch the price action. Let's see what the technicals do. They really didn't do much. The Juneteenth holiday definitely seemed to have an effect on the market and the action this week. We did get back to the scene of crime scenario we talked about a while ago, which is essentially, well, I'll cover that. But that was really it. There really isn't a lot to talk about because not very much happened. We did take a slight turn, I think, um, last week for a little bit worse. It was a little sloppy, and we did have sort of like just this grind that was sort of a little dubious the way things are working out. But as far as this week goes, I'm going to leave this up there for a little bit and just stick with the charts really and come back and just make sure I covered everything. But I mentioned this on Cocktail Hour a few hours ago, and I'm just calling this week pullback if not for news with a question mark because right now I think the major index ETFs are all pretty much near some key support level that traders will act on if it breaks. So far, it's held. The VIX seems a little underpriced to me, given what's out there. Mark Lepresti thinks that's because the market has things figured out, and that this is all going to work out. Very well could be the case. It's just right. It's very hard to say. I just don't have that kind of insight into what's really going on. So. I'm sure some insiders have a good beat on things, but I'm not one of them. So for me, I have to treat it like I think things can break in either direction. But if you're objective about things in terms of reading the charts, my objective take at least is that this was not a good week. So I think things definitely took a step back. A little bit further. I saw some more negative divergence creep in this week. I saw the first VIX call hit we've seen in a little while, maybe like 3 weeks or so. And we also had an SMH near-term put buyer as well. And so, with that being said, I think what I'll do is just come back to this. So let me just stop for now, and we will reposition and start sharing again. We're just going to get right into the charts, and hopefully, Thinkorswim will not bog me down too much. I've been really having a dogfight with it today. Screen 3 is where we want to go. And I hope that shows, yeah, that shows my cursor and basically the main chart. So we had this up there last week when we started adding some retracement because we were talking about how the SPY made it back to the so-called scene of the crime where it broke down from. We had a little discussion about that, and we talked about that way back when that's what often happens where you get back to that breakdown point and then you can again fail from there. And because of the way they moved this up, this could fail swiftly with those air pockets they left. You could have a pullback of some degree. And so what I really want to bring up though is this high here, which I'll leave the vertical line on. We're going to compare that to this high here, which is slightly higher, and you could see with the indicators down here, right, just basic classic technical analysis indicators, the momentum on the second high, despite it being higher, just wasn't reading as strongly. Okay. So that was a sign of negative divergence. And now, right, you've got this high here, and that corresponds to these readings here. right? Mainly the RSI. And then you have the second high again, which is higher with lower RSI readings. And now you're really starting to tail off in RSI where you're kind of approaching the 50 neutralish line. So, right, to me, if I didn't have these concerns about the news possibly breaking bullishly, which I don't think you can rule out. In fact, as I said, Mark Lopresti thinks that everything works out. That's what the market keeping the VIX only at 20 and not in maybe in the mid 20s or higher is telling you that that's what the expectation is. Like as I said, could very well be, maybe, but I'm looking at it like they're holding this thing on the 20, which is the light blue line, and they've got negative divergence. Last time that negative divergence did not work out well for bulls. We got this rout. Again, I'm not calling for a rout. I don't really call for things. If I do think there could be some dramatic stuff developing, I try to mention that. But in this case, I do think that could happen. I just don't know if it will because I just am not privy to the news. But if I draw a very aggressive a support line in this case, which I think you could put right there from back before, even if I draw another one, I think that we could pull from here and we could go across with, you're breaking down below these. And so you just continue to lose that kind of aggressively drawn support, and you've got these technical issues that are cropping up. So to me, right, that looks concerning. The initial area would have to be somewhere down near the 150 and the 200 there in purple, and rust, of course, for the 150. So that's about 582, 583, and then the 200 is right near 580-ish. Okay, just to put some round numbers on them. So not really the end of the world. We're only talking about a few percent, pulling back a few percent, but at this point, with the way things are shaping up, I don't think you can rule that out. And I think you have to be concerned about that. Now, could it turn into more? And I think that's where you start seeing the air pockets, right? Where they left this gap, they left this gap. And certainly, I think if you get really bad international news, geopolitical news, it could initially at least trigger some really swift selling. From what I understand, there's conflicting data out there with terms of positioning now. Some are saying, that everyone's loaded to the gills and there's hardly anyone in cash. If that's true, then that's a recipe for, and we're kind of towards the greed side of the spectrum. That's definitely a recipe that would help the cause in terms of if you want to see a pullback or you're expecting there to be a pullback. So essentially, right, that's that. And if I flash, well, I may as well do it in an easier fashion. Let me get this pulled over here. This is a little tricky because my thinkorswim is just absolutely bogging my computer down. But um, I'm going to leave these four up. Just going to boost them in terms of the magnification. There's the spiders that we already talked about at the top. Here's the small cap IWM down here. And you can see that's right at the 20. Now, to their credit, right, the 20 has held in both cases. So you can't really say, no, there's a big problem. You cracked the 20 already because a lot of people do follow the 20. But you're right on there in the cues as well. And here you have cracked the 20 in the diamonds, and you're near I believe you're near the 10 day, I'm sorry, the 100 day right now, which would open up if that's lost, which is very close to it. But if that's lost, you might as well say, well, the next stop SMA wise is the 50. But they all look very similar there. And they all look a little vulnerable to me, especially when I look at these sectors, which I'll do right now. And the sectors just are not having a great week, right? They're just not. And you could say, well, wait, what about XLE up here? Yeah, XLE kind of hung in there, but the real move, of course, was made in the prior week. But leadership sector XLK, leadership sector XLC, both right, kind of finishing on a sour note after not really going anywhere. XLF, which we had a good pop in Morgan, and we might have had one in Morgan Stanley. I didn't even have time to check. But this sort of has the lower high in here, maybe. and it's working its way down towards, right, threatening these lows. So one bad day and you could easily be there. So that too could become very concerning quickly. A lack of progress in XLRE, the healthcare XLV, which is, I guess you could call it defensive, that had a rough week. So you would think, well, that's not a bad thing. It's not, but it's really not, right? That sector's down. But look at over here, right? XLP, not a great week either. And then probably more importantly, XLY, not a great week. So not a lot of progress was made here. XTN, the best thing we can say about transports is that they at least didn't sell off in a big way, but they did not have a good week. I think the bigger news comes over here in basic materials with XLB having a bad week and threatening to now crack down to the next level. XLI has really made a new low today. That's really on the cusp of maybe plumbing new recent lows back down to the next support level. And then even XLU, which you would think would be doing better under the circumstances, but then again, maybe not with the new modern, new and improved XLU. That is not really having a great week either. So I don't think things look really good there. I'm going to minimize this. We're going to come back over to here with this chart that I'll pull in from a different monitor. And if you just look at this spiders plainly, I just don't think that's a good look, right? To me, like that's sort of telling me like a little more weakness there. And you could start opening up the door towards significantly more weakness if you want to call, for short-term trading, I mean, not necessarily long-term, but if you want to call down 2 to 3 more % significant, which, in one week it would be, probably would make for much better trading than we've had the last couple of weeks. We talked about it on Cocktail. There's been a couple of really good movers. They're always, I shouldn't say always, but there almost always are some really good movers in UOA. It's just kind of like the nature of the beast that, right, we get these hits and we evaluate them. Some things make it into our log of short list, if you will. And then inevitably, like a few of those have a really big move, usually right on a weekly basis, because a lot of times the UOA just, let's say, senses that there could be news developing. And then it does. And that's why I make the comments that if you want to compare UOA style trading to just momentum trading, which we do in Rebel Pit services, the difference to me is that you can still find really good scores, like I think we tend to do in Rebel Pit Pro, Rebel Pit Elite, even Rebel Pit Essential. Ryan and Greg, they all, they are in there as well. Greg's naturally in Rebel Pit Elite all day. Ryan is doing Essential, and then all of us are kind of collaborating in Rebel Pit Pro for the names for the week. But the difference, I think, is that you're kind of stumbling upon a big score if one develops there. Whereas with UOA, you're kind of, yes, you're still stumbling upon it, but probably in a little bit more of a targeted way. Like you're not shocked that it's happened or super surprised, because that's the difference, I think, is that with UOA propelling certain trades, that can lead to something a little bit more dramatic in terms of movement than just your standard momentum name. So just my way of looking at it. But anyway, there were some really good things here and there in terms of UOA this week. Oscar was another one of them, OSCR. But in terms of overall, the number of ideas that went in and the things that just simply did not trigger, probably one of the worst weeks of the year because of how bottled up this market was. So, not a lot to write home about that way. But in terms of finishing our discussion, we probably need to jump over to the market breadth view. And I don't need to have Oscar up here. I don't want anyone to be misled. Really, the market breadth indicators do not change regardless of the equity that's plotted at the top. But here's the spiders just for the right visual. And you can see really that it really wasn't a spectacular week for market breadth. I'm not even going to bother going into all the indicators because there's not much really to say that really differentiates here. It's just that things are not getting better, right? They didn't get better and they kind of got a little bit worse. So when I look at the sectors, right, that kind of had overall slightly poor performance for the week, aside from XLE, which has held its own. Um, and those kind of looking a little vulnerable, and this market breadth looking a little bit more concerning than it did last week, where it got a little worse in some ways, but it wasn't terrible. This is not the end of the world, but just as an objective picture, to me, it looks a little bit worse. So I'm leaning, when you look at the charts, I'm leaning towards things are getting worse. Now, the long-term trends in the equity market and all those major index ETFs that we looked at, they're all still up. In fact, I think we're looking at the 500 day there, and this might even be the 1,000 day if you were wondering. I'm not positive though. Yeah, it is the 500 and 1,000. So I wasn't sure if I pulled that chart up. So you can see that those are still clearly trending higher, but and those are long term. Some people like to use the 200. It's all preference, but my point is that these all look vulnerable, and I think news could tip this over. The problem is I'd probably be more bearish if it were not for the news, right? If we were not in such a news dominant environment right now, I would be more bearish, not to the extent of where, hey, this whole thing gets wrecked and we make new bear market lows. I'm not saying that can't happen. It's not that it's not, it's just that not right now. I can't really say that's going to happen based on what I know now or what I've taken in now. So to me, it's really not that dire. But clearly, right, with what's happening in the world, if things go a little too far with the kind of games that get played internationally, all of a sudden this could get horrible, right? Quickly. So I think that's where it is, and I think that's why you've got to take your DEF CON and your discipline up virtually all the way. And it doesn't mean that you think that things are falling apart. It's just that you know that they could. I mean, I think you know that things could fall apart quickly just based on the news. And all these are just not looking as good as they were. So I don't think there's any way around that when you just look at them plainly, you look at them with the indicators, you look at the breadth, you look at the sectors, none of it to me really looks very good right now. So what I'd like to just do too is show this right here, where here is a VIX hit that popped in today. It's probably the first one we've had in about 3 weeks that got added to the log. I brought that up, for that reason because someone bought a mid 20s 44,000 lot with the future in that I believe out there in SEP near 2185. So that is what our guys reported at the time. Anyway, the that's a very large hit, not the largest we've ever seen, but it's certainly a large hit. And they're positioning themselves out there, I don't out in time. So it seems like, and if you're wondering, well, why are they not buying the near term? Um, they don't always buy the near term. This will not lift as much as the near term if something happens soon. So I don't really know exactly what they're up to. It's just that players are positioning that way a little bit. You've seen a couple of hits there in the last few weeks. For a while, we didn't see any. So take that for what it's worth, but they're starting to come back for that. Another thing we did see as well was SMH. And a lot of you know that I'm really big on charting SMH and keeping an eye on SMH because of the place it occupies in the modern market. I'm trying to get this to show up here. Here it is. And you can see here that someone stepped in and bought 10,000 week out downside puts. So do keep in mind that those are about 6% away in terms of being at the money from where it was when it traded, probably about 7% as of right now. But SMH does have its moments where it can really move dramatically in just a few days. And all you really have to do to see that is to come over here, and we'll do that right now. And we'll go just have this clean chart up here just to show, like, as I say, wow, see, this is the little fight I'm having here where, boy, it's just not, even though I'm right there with the cursor, it's just not registering. But yeah, I mean, here's a great example of just a few days, right? At one point here, you were trading at 216-ish up here, and then, less than a week later, you're trading as low as 170. So if you're wondering, can this thing really fall by the end of next week down to 240 or beyond? I'm going to say yes, it can, right? I know it can. I don't know if it will. I just know that it can. And so going back to kind of do some charting on this, we'll do this chart. This one's hanging in there really tough, but notice, right, that there's some weakening here on the indicators. So it's impressive, right, that it's held on there and been able to hold the 10, which is the rising white line there. So you got to give it its due. It's just that this is why I'm leaning towards, okay, well, someone's positioning in the short term pretty big. Now, that could just be a hedge, but it is really a $20 out of the money hedge, which would put them, they're hedging below here. Now, maybe that's what they like to do. We just don't know that. It's just that, boy, you're going to lose a little bit, right? You're going to lose a quick 6 or 7% before your hedge kicks in. And then, of course, you had to pay for your hedge if it's a hedge. So it's plausible. I mean, there's no question about that. It's plausible. But yeah, I'm thinking, maybe they're thinking this thing cracks and works its way down to the 200 there, which is right at 238.40 right now, which is not far from 240. But you've got that, and we had a little bit of TSM put buying as well. And this also looks like, right, you can see the technicals are rolling over, yet the price really hasn't yet. So I think there's just that you took this lurch towards definitely concerning, vulnerable look. And unfortunately, I would think you get more of this. I think you get a little bit more of a pullback. I would say in most cases, you get more of a pullback where I've seen this type of a setup and sort of an overall complexion or profile. But we have the Trump administration, right, which is a whole different kind of beast when it comes to news. I mean, the news just flies fast and furious, and I don't know if it's designed to be that way to keep everybody guessing. It very well may be, for all I know. I'm not sure exactly what's going on, but I may not be alone. Anyway, so that's some of the paper that we've seen that's not been all that great. So I'm going to go back to our slide, and then I might just come back and take a look at the some levels that I could throw out there, just so folks have levels. But overall, right, I don't really want to belabor anything this week at all because I think you pull back, as I wrote here. Right? I think objectively it's not good. I think unless there's new news developments that really reverse the market higher, I think you're on the doorstep with a little more weakness of you have a 2 to 3% pullback. That would be my ballpark. Um, if you want to talk about a news neutral, most likely scenario, it's that. But of course, I can't account for news. So let's see. Yeah, so lurching towards concern. Objectively, things worsened. This dubious grind that we've had has worsened. The sloppy conditions persisted. Uh, Bulls did take a shot, but it just again it got rejected. The negative divergence we talked about worsened. Those air pockets we talked about easily from a month ago at this point, maybe even further back. Those could matter if there's news that we start careening lower. So keep those gaps in mind that we had. That's how those things get filled. When you usually, it's not usually the slow grind back down or slide back down. Usually it's this news creates this chaotic reaction, and then it triggers more selling, and then you just kind of ba-boom, ba-boom, ba-boom all the way down like that quickly. That's why a lot of people claim to like trading on the bear side more than the bull side, and more power to them. I still think it's true that you can make a lot of money more quickly, but you really do have to get put through a lot sometimes before you finally get the payday when it comes to bear side movement against an established uptrend. Let's see. So yeah, the possible scenario case that picked up. It may or likely depends on how you want to phrase it. It may depend on the news. I really think it does. I mean, I really that's the problem. I said it already too many times. So I think this failure, right, that we did the scene on the crime thing, these patterns have yet to fire. So if we do fail and you start heading lower, it can turn into something swift and painful. So be careful about that because you've got to look that way. This is now risk off again for the most part, by the way. So those couldn't fire the way that we thought coin did, but so many other things did not. So yeah, things look more risk off that way. These still look rough. The news developments I'm going to stick with, right, being the market's compass, unfortunately. I think that you have the short term and intermediate term. Now both are at risk. That's obviously a lurch towards the negative side of things. We did have a weak short-term bust out, as I said a few weeks ago. That's not normally not good. So we can't rule out the back and fill and no push near key resistance. So to this point, they just couldn't get it done. And I was watching Nvidia because I thought if they did finally start pushing, that Nvidia would be a nice breakout candidate. We had that as one of our top names from Rebel Pit Pro, and it didn't even trigger. It didn't. I don't think it triggered on either side because we're prepared to trade in either direction there. I really thought that if the market tried, it was going to, but the market didn't try enough, I guess, and Nvidia just could not even get it going. And that 145 level has been really the death level for Nvidia bulls. It just cannot get through there. Luckily, as I said, it didn't trigger, but it's just very disappointing when you're that close, you can't get it done. So that could not do anything. Um, Talked about this already, the discipline all, but I did add another asterisk on the Spidey sense because, yeah, I think something's starting to percolate out there that's concerning enough that people are acting on it in terms of some put buying and some VIX hedging or maybe even outright VIX speculation. I did say this before. I had this pretty strong, kind of like last summer-ish heading into the fall, but it didn't really turn into anything. So that's kind of rare that that happened. But usually when I get this feeling something bad happens, unfortunately, I still have it. It's not as strong as it was last fall, but it's definitely picked up a little bit with what I saw this week, where I'm like, yeah, this just isn't feeling good. It's not acting right. The market's not trading well. It could be right that you're reading too much into it. You don't want to read too much into it. You don't want to be also be a little too nonchalant about risks that are starting to reflect in the charts either. So I don't want to overdo it or underdo it, but I do feel like objectively, trying to be objective here, I just don't like what I saw. And I think you have to be very much in high discipline, high DEFCON mode. And that to me just means, sure, you can still trade the bull side, but you've got to be a quick roller and a quick trimmer on some of these because until we start breaking our way out of this, and you'll know that if news does it, right, you'll see something either really good or really bad that ignites the next thing, and then you can go from there in terms of being a little more patient because now you kind of know what's driving the market a little bit and maybe if it has staying power or not. But I think on that note, all we're going to really do here is I don't want to belabor the charts. All I'm really going to do here is just talk about, the VIX is still in its own way. You all know my levels. Like once it gets above here, then really the 20, you could have 20 up there too, but then I looking for it to go to the mid 20s and then just near, like just shy of 30 from there. These are my kind of ranges that it gets in. So it hasn't really been able to move into that mid 20s range, but it did close. It is the summertime and it did close above 20. So for whatever that's worth. But let's go back and I'll just rattle off a few levels and then we'll wrap things up because I really don't want to belabor this. There's really not a lot to say when news is this dominant, but yeah, I think you could trigger off of, well, news will probably do it if we get it over the weekend, but Friday's low, right? A new low would be not good. And then you're really looking at this 150 here and the 200 as we talked about. On the upside now, right? I really think that you could use these resistance lines that are now we're below now if you wanted to, but very clearly you could just see that there's something really at that 600, that round number, 600, 601, and then 605, and then really you could just pretty much look at the high. I mean, 613. So that's that, and you just can't rule it out because Trump. I mean, just keep it simple because Trump. So there's the levels on that. Um, let's see, we'll jump over to Qs as the next one. And these are also flashing vulnerability below Friday's low. You can see the big air pocket sort of down to this. I think there's maybe a gap here. Let's see, 1184, 1193. So technically there's a 7 cent, I'm sorry, 9 cent gap there. But yeah, for all intents and purposes, that gap's closed. But some people are going to harp on that old purist types are going to harp on that. Could matter. We'll see. Anyway, I think everything dovetails right there near the 505. I think that's a level. If you want a closer level, mm, probably going to have to go with that one there. Probably got to go with the 517. So I think basically 517 and then 505, and you're going to have your SMAs coming in there to catch it. A lot of them, including the 50 is rounding up to get there in gold, right? So those are your levels, and once you get beyond, I think once you get beyond this 537, there's hardly anything left, right? So if they manage to do that, you know that probably the news is sufficient enough to have them challenge the all-time high, which again with Trump could easily happen. IWM was doing really well. Now, kind of hit the 200 is we talked about it. The 200 has done it again, right? Where it just can't get through certain SMAs at certain points and break this sort of overall downtrend. It does have an intermediate uptrend. We have to acknowledge that. The short-term trend looks down now, right? Or about to be down. So that's starting to get more concerning. But clearly, I think the 100 there on the downside at 206 and change that opens up the door to the 50, which would put you near 201-ish now. On the upside, probably getting through this week's high. This week's high was 211, so call it 95, so call it 212. But then you run into the 150 at 214 and the 200s at 215 and change. And you may as well just key off of this high here at 216. So that's going to be the rough sledding unless the news propels it, right? And you could say, well, how could you be bullish or bearish like so easily? Well, look, it's a higher low here versus these lows. This is a higher high. It would just be a continuation of the intermediate term trend. And if you get above all these SMAs and you're able to hold, that's often interpreted as a good sign by technicians, and people like to see that price action. On the flip side, right, you could really be in trouble quickly, right? Where if you don't hold that 50, just by the nature of the gap, the way they took things up, no looking back, really, they could plunge this thing on really bad news very quickly. So there you have it on there. Just not really a great, certainly like right now, without news, I think we're just shaping up for maybe there's going to be some people repositioning in front of the second quarter EPS, and we're about those starting in earnest, or you're probably about 3 weeks to a month away from when it gets really hot and heavy. This week's low is your breakdown point for the diamonds. That happened today down a point basically. The 50 there is at 414.84. That's what I'd expect there. Getting above the 150, which seems the highest right now, right about 427 here. And then you're challenging right the next levels up, which if you want to take that high into consideration, that's 432. Beyond there, where do you go? Beyond there, you're probably looking at a flat line that's going to incorporate some highs and lows. I'm going to say 438 is about the next level up for me, ballparking it quickly. So, you've got some trading opportunities if you start breaking out or breaking down that are not too bad, especially on the downside in some of these things. But we got to get something that's really going to jar us and start moving us in a bigger way again. I hope that's good news rather than bad news. But as of right now, I feel like the FOMC was a nothing burger. You just don't have anything really to key off of other than this geopolitics. The market probably is focused on that because the economic data is sort of mixed to a little bit better. Nothing great though, really. And it was about positioning, I think, for the longest time, but maybe now positioning's kind of become neutralized and no one's really too far off sides or ill-footed, then you don't even have that driving it anymore. There's no squeezing, etc. So we need this news to break, hopefully positively, and that'll hopefully re-energize things. So I'm going to wrap it up on that because there's no reason to go even longer talking about the same thing. I just think you come in Monday, there's no good news. You're looking vulnerable with any weakness. I think you're likely to slide a few more percent. And it might not be the worst thing, right? Just to give a little bit more back than we have so far. So that's really where I'm at on just this quick and dirty version of the videos this week. I do want to wish everyone a great weekend if you catch this video early. I do want to wish everyone a great week ahead. I hope something I shared with you helps you out this upcoming week or some week in the future. And as always, I'll thank everyone for tuning in, and hopefully we have something more interesting to talk about in the near future. Take care, everyone.